China's National Bureau of Statistics released data on July 17th that China's GDP in the first half of 2023 stood at 59.3034 trillion yuan, up 5.5% year-on-year at constant prices, triggering wide coverage of foreign media. Against the context of sluggish global economic growth with major economies seeing subpar growth, China's growth rate of 5.5% demonstrates a relatively high level of value. Financial Times, citing China's National Bureau statistics that China's economic development had fully returned to normal in the first half of the year. Catering sales rose 21.4% in the first half of the year as consumers returned to restaurants. Industrial output in the renewable energy sector also picked up. The Guardian said, compared with a year earlier, China's GDP in the April to June period was 6.3% larger, quickening from 4.5% annual growth pace for the first 3 months of 2023. The 5.5% marks a growth rate driven by innovation and growth model transformation. DW says China is prioritizing quality rather than quantity of growth. China has been trying to engineer a shift from being a low-end manufacturer to becoming dominant in the industries of the future like AI. According to Al Jazeera, China's new strategy also aims to reduce China's carbon footprint while pursuing cutting-edge technologies like advanced semiconductors and quantum computing. Automating more manufacturing by building upon China's advanced digital infrastructure could also help maintain industrial productivity. Against a sluggish global economy, China's economic growth rate of 5.5% is quite eye-catching. From the data released by major economies, in the first quarter of 2023, the GDP of the US, Eurozone, Japan, and Brazil grew by 1.8%, 1%, 1.9%, and 4% respectively. Even taking into consideration of the second quarter, China's economic growth rate still is the fastest among all major economies over the first half of 2023. Bloomberg, citing the International Monetary Fund's forecast that China will be the top contributor to global growth over the next 5 years, with a share expected to represent 22.6% of total world growth, double that of the US. The New York Times says China has a sizable influence on global growth. Still, China remains the world's largest importer of food, oil, and many other commodities.